And then when you started to, officially invest out of state, how did you pick those markets?
Yeah, that's a good question. So everything was local in New Hampshire, in various cities in New Hampshire. I was living in Boston, where I was investing was about an hour away everywhere. So drivable, I call that local. Really for the first 4.5, 5 years. And then I was like, all right, I got to start looking out of state to do these bigger deals that I wanted to do. And yeah, the market selection was the hardest part for sure, because everyone that's listening to podcasts hears about, the Southwest, you got great markets. Southeast, you got good markets. Midwest, Cincinnati, Cleveland, Indianapolis. Oh, you can get Cashflow in Kentucky. You can find deals in, Oklahoma City, but you want to be in Florida because that's where all the people are moving. So there's so much friggin' noise that makes that part of it really, really hard, that I kind of looked at it from a different perspective. I basically said, really, where can I compete? One, that was the first thing. And no one talks about this. Wow. Where can I compete? If you're an investor that's in Boston and you're trying to buy deals in Tampa, you're not going to compete. You're just not. Unless you're working with somebody that's in Tampa that is, has local relationships. Maybe you'll get a deal, but you're gonna bang your head against the wall for a long time trying to compete with all those local and national investors. Like a market like Tampa, you got guys from San Francisco trying to buy there, Chicago, New York, like that's a national market. So unless you're trying to buy single families and duplexes where you're really going to direct to seller, if you're trying to buy something that's 20 plus units, you're gonna have a buttload of competition. So for me, I was like, where can I actually compete? I got to go to a tertiary market. I can't go to one of these name brand markets. So the first market I started looking at was Lakeland, which is 45 minutes outside of Tampa, 40 minutes outside of Orlando, right between the two. And the other thing I was looking for was a market that was similar to where I was investing locally. So in size, in price points, in tenant class, in construction style, in the types of finishes that you would put in if you were to buy it. So Lakeland, a lot of C-class housing there. Is very, very similar to Manchester, New Hampshire. Same population, same kind of tenant class, same types of deal sizes. So I knew that I could find a deal there and execute it well if I did find it. It wasn't like I was trying to go from a C-class market in New Hampshire to like an A-class market in Tampa, for example, where it's a whole different kind of business. So, and then I did the same thing out in Indianapolis, right? Indianapolis, that's a big market, but I focused on some little sub-market zip codes that were smaller in size, C-class tenants, similar type of deals that I was doing in New Hampshire, so that I was familiar with. And fundamentally speaking, I had like an epiphany one day where I was looking at like 8 markets. I was trying to network in all of them. I was trying to analyze deals in all of them. And I was like, what the hell are you doing? Like, you're never going to get anything done if you're looking in all of these different areas. So at some point, you just got to pick 1 or 2 and that's it. You have to block out the noise and you have to just go deep, because if you want to find deals, especially good deals, whether it's direct to seller or with brokers, you have to plant very, very deep seeds relationship-wise in a couple of select markets. So that's inevitably what I did. I started with, where can I compete, which wasn't the big one. So I went to the tertiary ones. Yep. What are similar to what I already know and I'm doing in terms of class, price, all of this stuff. And then just block out the noise, pick 2 and just go deep and just trust that it's going to work out. And, every time someone's like, have you thought about investing in North Carolina? I mean, there's some great, like, no, I'm not. I'm not thinking about it. But that's the hardest part.
Yeah. I think that's a huge value point right there, because basically obviously it's a different location, but it's basically the same, aspects of the market you're in now, just in a different area, and it's the exact same. And then, exactly, what finishes, like you said. I think that's a huge value point for people that, maybe they're in their market right now, maybe they're low inventory. Obviously, real estate market right now is just crazy, but maybe they can't find them in theirs. Just go find a like place, out of state and start doing that. Let me ask you this: when you started going out of state, what was like the Bigger Pockets calls it core 4, but like who did you have to kind of connect with in order to get these deals rolling?
Yeah, first and foremost, you need a property manager. That's number 1. That's number 1 through 4, and then the other 4 are 6, 7, and 8. Because your property manager is, if you're buying multifamily, and it depends on the property management company, but most property management companies are also going to handle construction. So that knocks out 2 of the core 4, right? You shouldn't be managing your renovations with a contractor from afar. That's suicide mission, and I'm sure plenty of people do it. Sure, people are like, no, I do that. All right, well, good for you. But that's not what most people do, right? That's not what most people should do. So You find a good property management company, they're going to manage your turnaround if they are a good management company. A lot of them probably aren't and wouldn't do that. But you find a great management company that takes care of those two. The other two of I think it's attorney and broker, right? Those are the other two that people care about. Find a good attorney and ask for referrals from people that are in that market. Again, your property management company should be able to refer you to a good attorney. And a lot of really good attorneys, depends on what you're using them for. If you're looking to use them for, entity creation, operating agreements, stuff like that, a lot of attorneys work across states. So you might be able to find one locally that'll work. Like the guy that puts together our operating agreements for Florida is a New Hampshire attorney. So we don't have to find a Florida one for that. And then for a broker, that's going to be tricky, right? I think, I think that, again, what you want to do is create a spider web of referrals. You want to just meet investors. You want to ask them who they would refer as a broker. Then you want to ask those brokers who they refer as a property manager. And you want to ask those investors who they refer as a property manager. You want to ask every single person you meet for referrals to everything that they aren't. And then eventually you're going to get overlap with a few different names, and you're going to be like, all right, this company's been recommended by 3 people. They got to be pretty good to work with. This broker's been referred to by that investor, this attorney, and that management company. They must be a pretty good guy to work with. And then go really deep on building relationships with those people. Your management company is the most important part of this, like I mentioned, and they're going to be critical in the underwriting and due diligence process of deals as well. So, get on a call with them, pay the guy that you're talking to spend an hour on the phone with you to talk about markets, to talk about rents in those markets, to talk about what they think you should focus on, to talk about renovation costs. Like pay people for their time. Same thing with a broker. If you're on an intro call with a broker and you're asking them a million questions, if they're a junior broker, if they're someone that's just getting in the business, they're going to be very generous with their time. If you're working with a broker that does a lot of deals and is an A player, send them a thank you gift when you get off the phone, right? Don't just I think a lot of people are just they don't understand that people's time is extremely valuable, especially if they're talking with some guy out of state who they have no idea is going to be a player. So especially if you're getting started, for me, it helped that I had a large portfolio locally and I could kind of say, hey, I'm actually going to transact when I get down here. But on all these early conversations, I was sending them a gift card when I got off the phone. I was doing this, I was doing that. And I think that certainly helped build those relationships and made me feel really comfortable with the people I was working with. And they felt comfortable with me as well.